Our business plan is on D-Light. My name is Anabelle Baxter.
Seirra Hoey.
Makayla, Lawless.
Dante, DeFelice.
D-Light is a global social enterprise tackling energy poverty and providing solar-powered lighting and appliances. Founded after a kerosene lamp accident in West Africa, the company now operates in over 70 countries. Its pay-as-you-go model and durable products have already impacted over 100 million lives, and it aims to reach 1 billion by 2030. Our mission is to empower people without access to electricity through clean, affordable solar solutions. Our vision is to reach 1 billion people by 2030 and end energy poverty. D-Light fosters an inclusive, community driven culture rooted in research, innovation, and global impact. D-Light operates in the off grid solar energy sector as a manufacturing and distribution firm. Our competitive edge is the pay as you go model, which is user focused design and last mile delivery. We're a founder led for profit company with operations across Africa, Asia, and the US, and supported by investors and grants. The off grid solar industry is worth 137 billion today and expected to nearly triple by 2034. With over 700 million people still lacking electricity, demand is very strong, especially in Africa and Asia. Our target is low income off grid households and small businesses who value affordability, durable, and flexible solutions. Our strengths include having a strong brand, affordable pay as you go products, and meeting global quality lighting standards. Weaknesses include some urban market gaps and reliance on our partners, but we do see growth opportunities in new regions and upcoming product lines. Some of our threats include regulatory risks and high competition. D-Light competes with M Copa, Sun King, and B-Box, and others. We stand out with affordable solar kits, mobile payments, and localized customer service. We support this advantage through NGO and telecom partnerships, but barriers like high startup cost and remote logistics still are an issue we're facing. This table shows D-Light leading in quality, price, location, and service, while M-Copa and others are close competitors. D-Light still ranks strongest overall in delivering value and access to underserved communities. D-Light targets off-grid low-income households in Africa and South Asia. The total market area is over 700 million people, with the primary focus on rural populations in Kenya, Nigeria, India, and Bangladesh. These customers really need affordable, durable, and flexible energy solutions. We offer a wide range of solar powered products, including lanterns, home kits, TVs, and fans, which are all designed for affordability and durability. These products are certified, built in house, and meet customer needs like studying, safety, and mobile charging. We're also in a growth stage with strong IP protection.
D-Light uses value-based pricing to keep products affordable while reflecting the value they bring. Our pay-as-you-go model lets customers pay in small, manageable amounts via mobile money. Profit margins are kept moderate to ensure accessibility, and while discounts aren't formally listed, they may be available through local partners or non-government organizations. The T200 solar lantern sells for $35, with a cost of goods sold of $20 and a total variable cost of $22. This pricing leaves room for gross profit of $13 per unit, allowing D-Lite to stay profitable while keeping products affordable. D-Lite promotes its products through local radio ads, community posters, and in person demonstrations to reach customers directly. The brand is trusted for its reliability and positive impact in communities. Marketing materials include visuals, radio scripts, and toolkits for sales agents. Word of mouth and award recognition help boost publicity. Customer service is supported by agent networks and local centers that offer warranties and ongoing support. D-Lite products are sold in over 70 countries through local shops, e-commerce platforms like Jumia and Amazon, and a wide agent network. We partner with mobile networks, non-government organizations, and microfinance institutions to expand reach. While rural logistics can be complex, our agents use last-mile delivery to reach remote communities. Our distribution is powered by a workforce of over 15,000 commission-based sales agents. D-Light's philanthropy strategy focuses on expanding energy access by partnering with non government organizations and microfinance institutions. We support local organizations and foundations that promote safety, education, and economic opportunity in underserved communities. Delight's leadership team brings together global expertise in social impact and business strategy. CEO and co founder Ned Tozen leads with a strong vision for energy equity and over a decade in social enterprise. CFO Ronald Fend oversees financial sustainability with experience across emerging markets. Carl Scare, Chief Product and Strategy Officer, drives innovation through user focused design. COO Jacob Lewandowski manages global operations and supply chains to ensure reliable delivery. Together, they lead D-Lite in its mission to bring affordable, renewable energy to underserved communities. D-Lite's team includes full-time engineers, designers, sales, and operations staff who support daily functions and innovation. As we expand into new markets, we plan to grow our sales and support teams. Local onboarding and agent toolkits help ensure effective training. We also work with over 15,000 part-time commission-based agents worldwide, with more to be added as our distribution networks grow. Delight invests heavily in user centered research. Their research and development process includes field testing with real users across India and Africa to ensure products are practical and effective in off grid environments. Ongoing efforts focus on refining designs based on direct user feedback. All products are developed in house and intellectual property is protected to support long term innovation and scalability. Delay operates regional headquarters in 7 countries, along with warehouses and distribution hubs to support logistics. They use online ordering portals and mobile pay-go systems to streamline operations. Their integrated technology platforms manage sales, payments, and inventory, supporting efficient growth and rural access. Delight's supply chain is global. Products are designed in Hong Kong, manufactured in China, and shipped worldwide. Production follows a mass assembly model using designs refined through field testing. Innovations like mobile paygo systems, agent apps, and inventory dashboards help streamline operations. Distribution happens through agents, retail partners, and e commerce platforms, with lead times reduced thanks to regional inventory hubs.
To ensure product reliability, we use field testing and offer a 2-year warranty on all products. We focus on durability and meeting lighting global certification standards to guarantee performance. This gives customers peace of mind, reduces risk, and ensures our products last in even harsh conditions. We are looking to raise roughly $242,000 mainly through loans, grants, or angel investors since our founder capital is minimal. Funds will be used right away for $63,000 for inventory, $80,000 for platform marketing, and $99,000 for working capital and operations. We're open to equity or impact investments, and based on our projections, we expect a payback within 2 years. These projections show how our cash changes with growth. In 2006, we ended with $220,000 in cash due to a strong operating cash flow and low investments. In 2007, despite $25,000 in financing, cash fell to $141,250 due to a net loss and major investments. In 2008, with operations stabilizing and continued investments, we expect to end with $122,750. We're managing our cash carefully while still investing in the growth of the company. Our balance sheet shows strong asset growth and a solid equity base over time. In 2006, assets totaled $225,000, mostly in cash. By 2007, assets more than doubled to $496,000, driven by added inventory, equipment, and projected cash balance of $420,000. In 2008, assets jumped to over $1.56 million, mainly due to a significant increase in cash and continued investment in equipments. Our current liabilities stay low and manageable. Long-term debt appears in 2007 to support growth but remains conservative. Equity is the biggest driver of financing. Overall, this reflects a healthy and scalable business with a strong financial foundation. As we can see on the income statement, in 2006 we had no sales, but we earned $170,000 from other income. In 2007, we expect $75,000 in sales and a net loss of $38,750 due to a high SG&A and no other incomes. By 2008, sales are projected at $150,000 with $1,500 in net income nearing our break-even point. Earnings per share improved from negative 0.39 in 2007 to 0.02 in 2008, which shows our positive momentum. Our return on sales is 5%, which means for every $1 in sales, we're keeping 5 cents in profit and covering all expenses. This is a big improvement from our original 1%, and it aligns with the industry standards for lighting and consumer energy products, which usually sits around 5 to 10%.
Break even is the point where our total revenue equals total cost, meaning we're not losing money, but we're not making a profit yet either. In our case, to reach break even, we need to sell 1,000 units per month or 12,000 units per year. Once we pass that point, every additional unit sold contributes directly to profit. It's a key milestone that helps us measure our financial health and guide our sales goals. This chart highlights the company's liquidity and debt positioning. Current and quick ratios are exceptionally high, showing strong short term financial health. Debt and debt to equity are much lower than industry norms, meaning minimal leverage. However, times interest earned is below average, which could mean limited flexibility to handle debt obligations. This chart shows strong efficiency but weaker profitability. Inventory and receivables turnover outperform industry benchmarks, and the company collects payments faster. However, profits are far below average and the return on equity is low, which may concern investors. Improving margins and asset utilization should be their main focus. This chart outlines how the total 6.1 million in funding will be used. The largest portion, 5.58 million, is allocated under other, which likely includes major operational or strategic investments. 500,000 is dedicated to working capital, ensuring they can cover day-to-day expenses and stay flexible. Smaller amounts are budgeted for equipment, fixtures, and furnishings, allowing them to set up business without overspending on physical assets. No funds are allocated to real estate, which keeps their model lean and mobile. Overall, this plan emphasizes flexibility, scalability, and smart capital allocation. We're seeking $242,500 in startup capital to launch and scale operations. Funding will come from a mix of sources, including minimal founder contributions, business loans, government grants, and angel investors. The funds will be used for inventory, platform development, marketing, and working capital. We project a break even point by year two, with the potential to impact over 180 million lives globally. With a strong financial plan in place, this operation presents a low to moderate risk, making it attractive to socially driven investors. This slide outlines the key risks and barriers D-Lite may face. $63,000 is tied up in inventory early on, and profit margins are initially low. The company also relies on third party distribution, which limits control. Barriers include the need to meet strict lighting global standards and the challenges of reaching remote price sensitive customers. To overcome these issues, D-Lite uses scalable pay as you go pricing that maintains both global offices and local agents, and diversifies funding sources to reduce dependency and risk. We've outlined three exit options for D-Lite. The most likely and attractive is acquisition, where a larger solar or energy company buys D-Lite as it grows. A second option is an IPO, allowing the company to go public, raise significant capital, and offer returns to investors. Lastly, if growth isn't sustainable, liquidation is the fallback, selling assets to recover investor funds. Each path is designed to ensure that investors have a clear exit strategy depending on the performance and market conditions. D-Lite has achieved several major milestones over its journey when it was founded in 2006. The company launched its first product just 2 years later in 2008. By April 2025, it had already helped avoid 40 million tons of CO2 emissions. In June 2025, it surpassed 200 million lives impacted, showing its massive global reach. Most recently, in July 2025, D-Lite crossed 842 million in consumer financing provided, underscoring both its financial scale and social impact. These milestones reflect the company's rapid growth and commitment to sustainability. Over 700 million people still lack access to electricity, creating a massive demand for affordable energy solutions. D-Lite designs its own products from scratch and uses a pay-as-you-go model to ensure affordability for low-income users. With operations in over 70 countries, 30,000 retailers, and 15,000 agents, the company already has global reach. It operates within a 137 billion solar industry that's projected to triple by 2034. D-Light is uniquely positioned to scale both its social impact and financial returns in this rapidly growing market.
Thank you for listening to our presentation.